it's not looking a very good screen on the Asia Pacific because all the indices have opened low.
What's heartening though is take a look at that Europe number. The losses have come down drastically. Con call happened post-market and takeaways are looking muted.
Revenue saw an uptick of almost 20%. This is 6% higher than what the street was expecting.
Because we're starting at those levels where the supports kick in. With the Nifty down about 40 points.
AI has proposed a new framework around what it thinks special surrender value should be.
Down close to about 0.5% on the benchmark indices. The Nifty down for the 5th day in a row.
Dermicool and summer products, we expect a substantial growth.
Business restrictions on two Edelweiss Group companies, and that is ECL Finance, which is their SME financing NBFC arm, and Edelweiss ARC.
Outlook on 6 Indian banks has been revised by S&P. But the IMD has clarified that the maximum temperature of 52.9 degrees Celsius, which was recorded yesterday in Delhi's Mangeshpur, may be due to an error.
In fact, Pharma, IT, some of the defensive today are seeing quite a bit of selling pressure.
Sharpest strategies, top market trends, unmatched perspectives, the trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Well, that is the day so far. You're with us here on a fresh new edition of Closing Bell Thursday afternoon, and it's a repeat of what we've handled for the last, I think, at least 4 trading sessions now. Market, finding it difficult to sustain. We are now actually, as we start the last 60 minutes, down 200 points on the Nifty. I'm Prashant. With me, my colleagues Rima and Nigel. Guys, good afternoon.
Hi, afternoon. The only thing that's different from yesterday and the day before is that today banks are doing well.
Yeah.
Well, that's right. And, I think actually, with this kind of a downtick that you're seeing from the recent peak, it may not be such a bad thing if the outcome is good, because you're already pulled back close to 600 points in the top. The markets are very, very light. And one of the reasons why the Nifty Bank is higher is because the rollovers were so light. So positions are light in the Nifty Bank. So let's see how this goes. But for the time being, the last tick is at the low point of the day. No sign of recovery at all, whether it's, any of these frontline names as well. Tata Steel is down close to 4.5%. Yeah. And we'll discuss that and more later on in the trading session as well.
The low which the market hit, right, when the polling started, when the elections had started, was 21,932 or so. I think that was the low. Then, there was a recovery. There was an all-time high about 23,000. That was 23,110. And we are now kind of retraced almost 50% of the entire move up. So, we're kind of sort of swinging from one extreme to the other extreme, although this is not an extreme yet. But there is a little bit of course, nervousness and a bit of caution, which has been constantly being built into the system, which is actually not a bad thing at all, provided, there is, of course, the market's base case is what is actually sort of comes through. We'll see. Now, the major support, these hourly averages, etc., have all gone. The 20-day comes into focus now. And for the Nifty, that number actually now stands at 22,478. Right? That's the big one, at least from a short-term perspective, which is not very far away, 20 points away as we speak on the Nifty, the 20-day moving average. I must point out that the RSI, which is a good indicator of whether the market is oversold, overbought, at least on the hourly charts and maybe in a day on the daily charts as well, is oversold, clearly oversold. The swing has fallen quite a bit. Bank Nifty is, as we've been discussing, doing much better. We'll talk more about this. Here, we basically need a cross of the hourly averages in the upside, the 20 hourly, which is at 48,913. And that's about 1% away, less than 1% away on the Nifty Bank. And, as I said yesterday as well, is it really a whole deal that you can take away from these sort of last few sessions? Not really, because, metals did very well yesterday. It's the top loser today. Pharma did very well last 2 days. It's the top loser today. And IT is under pressure as well. So it's a bit of a flip-flop, which we're seeing all over the place. Rima.
Well, the only Nifty stocks which are in the green are 5 banks. Outside of that, all 45 stocks are in the red. So the top banking gainers are ICICI Bank, Axis Bank, State Bank of India, HDFC Bank, Kotak Mahindra Bank. These are the only Nifty stocks, large caps, which are managing to hold up in the green. But outside of that, it's, all the other sectors are under pressure. Metals down 2.5%. IT is down over 2%. Pharma is losing ground. CPSE index is seeing a fair amount of profit booking. The Nifty CPSE index is also down 1.5%. And now the correction from our all-time peak levels is about 2.5% on the mid and on the Nifty.
All right. Markets at the low point of the day. And in fact, last few minutes, you've seen some additional selling that's come in there. Metals, as Rima mentioned, Hindalco is down close to around 1% now. IndusInd Bank as well, that suddenly pulled down considerably. And Tech Mahindra as well has pulled down. I think Tata Steel has moved lower post, those comments that came in that interview we just had with the management. So Tata Steel has moved to the low point. A bit of a bounce is what we saw, but that one has got sold into. How do you position yourself, though, in the final hour of trade? We have our expert who joins in on the show. Let's get a view going on. We have Rajesh who's joining in. Hi, Rajesh. Good afternoon and good to see you in. Tell us, what do you make of today's trading action? As we speak, we're at that very crucial mark, 22,480. Your view on the Nifty? Rajesh, I think you'll have to unmute yourself. We can't hear you.
So it's good to be on your show on CNBC-TV18. Yeah, we are on a crucial mark. We are continuously seeing profit booking in Nifty. And the main reason for today's profit booking has been the high call writing. And even at 22,600, we are seeing a stiff resistance. So for 22,600 to be crossed seems to be a daunting task. But having said that, we are now placed at a key support levels. As you highlighted, 20-day DAMA is placed around 22,470, 450. So it would be crucial how we sustain here. If the market continues to sustain here, then we can expect a bounce back, similar to what we have we have seen in Bank Nifty today. So Bank Nifty, if any trade has to come, it would be on the Bank Nifty side. Any dip towards 48,600, 48,500 can be bought, with 48,300 as a stop loss.
Okay, what about your stock recommendations, Rajesh? What would you advise?
Yeah, so since we are bullish on the banking stocks, I have a positive view on the Indian Bank. Indian Bank, we are seeing a continuation uptrend, continuously moving in a higher top, higher bottom formation. And we are also seeing a flag pattern breakout with strong volumes. So Indian Bank, which is currently trading around 584, can be bought with a stop loss somewhere around 569. One can expect the stock to move towards 620 levels. My second pick could be Bata India. This stock has been an underperformer, but today we are seeing some base formation in this stock with strong volume formation. From higher levels, it has corrected a bit, but as monthly candle is about to form, we are seeing strong formation in Bata India. Bata India can be bought around 1360, 1370 with a stop loss somewhere around 1330 and target around 1450.
All right, Rajesh, we'll leave it there. We'll have you back on for more on the market. We are very, very close to the 20-day moving average, and we'll see if that goes and it goes and then sort of we end below it, or does that manage to act as a bit of a support here. Emami has got no such problems. It's surging. Mangalam is here with the fine print of the results and the management commentary and what the street is making of it. Are there upgrades in? Mangalam, over to you. Good afternoon.
Well, extremities of the weather are doing extremely well for Emami, and a lot of other things are coming together for the company as well. Remember, in the fourth quarter, we had winter extend all the way up to middle of January, and in some parts of the country, even February. So that did extremely well for their winter portfolio, which is a little over half of their overall sales. And now the way forward looks extremely strong for them as well. Because of the heat waves, the summer portfolio for the company is doing well as well. So for the fourth quarter, they saw domestic business growth of almost 8% with a 6.5% volume growth, which again is in the top decile of all the FMCG companies that have reported numbers so far. And the company did see an improvement in their gross margins to the tune of around 270 basis points, but they plowed back some of their money into ad spends, and that came to around 20% of sales as against 15.5%. On an overall basis, the company reported revenues of almost 7% growth, and the margins were largely stable. The net profit also grew in low single digits itself. The important part for them, Boro Plus as well as the healthcare business, grew extremely well because of the winter that I spoke about. Navratna and Dermicool, which did not grow as much, just 1%, actually saw secondary sales growth of 20% in the March quarter. And this heat wave is likely to do well for them. And that's what the management said to us as well. So that's something that we'll be watching out for. The D2C brands are doing well, now account for 5% of their sales, growing in high double digits. So those are factors that the street will be watching out for. In terms of the things that the management said to us, double-digit revenue growth is what they're targeting, which would be led by volumes largely, and price would be just about 2 to 3%. They maintain their gross and EBITDA margins at current levels, and at the same time, they are looking to expand their D2C businesses a lot more as well. Importantly, Dermicool, which will have a first full-fledged summer this time around, will see big growth as well. Substantial growth in their summer sales is what the management has been speaking about. Brokerages have taken note of that. Over the last few quarters, the company has seen multiple things come together for them in terms of management changes. Also, the company having sold their hospital and the promoters' pledge reducing. And Jeffrey says that at 28 times FY25 earnings, this is a lot more value attractive than all the other FMCG companies. So they have their buy rating and a target price much higher as well.
Okay, thank you very much for that. The stock hit a fresh 52-week high today, but it's still not at its all-time high level, which is about 682 rupees. Devin Choksi is now with us on the show. Devin, would you, Emami is, not very expensive relative to what couple of the other, stocks in the market is trading at, but this is a company which is going to see a double-digit kind of a revenue growth, stable margins. So would you bet on Emami at these levels?
Yeah, good afternoon, Riva. Well, I think 7-8% kind of a growth at this point of time is probably, I think, suggesting that most of the things are on track for the company. And the portfolio of personal care product particularly, I think they remain relatively, I think, promising from the point of view of generating the steadier return. Whether at 28 or 29 times, I think, price outlook ratio, I do not know, I think, whether immediately, I think it becomes a buy opportunity. Because in the rest of the cases, I think when you look at particularly likes of ITC and its FMCG portfolio, you find that I think this particular portfolio has far better visibility also in form of, I think, the larger amount of growth that it is talking about. And should they end up monetizing this particular portfolio, this could be, I think, a better opportunity. But however, as said, I think the particular company right now, Emami, so we don't have the coverage to make the recommendation, but we believe that I think there is scope for some improvisation in the rating for this particular stock.
Okay, all right. Devin, I wanted your view on Tata Steel as well. But first up, let's run our viewers through the basic details then and why the stock is actually lower. So first look at it, the EBITDA number on a consolidated basis was better than what we were working with. And there was a beat on both the India operations as well as the European operations. But despite of that, the stock did see some kind of selling pressure. All those numbers should come up for you actually on the screen. First look at it, it appeared like a good setup number. What was the issue then in the past quarter's numbers? Well, UK had a £50 million of one-off benefits due to carbon cost credits. Now the read-through is, basically the European EBITDA per ton loss is at $70 per ton. Earlier, we were working with around a loss of around $40 per ton, which the street was very, very excited about. They've also given us a guidance for Europe turnaround. For Netherlands, they're saying it will turn EBITDA positive in the first quarter itself. That's because production is back to normal post the realignment of their blast furnace. The Netherlands coking coal consumption cost, though, will go up by 20 euros per ton in the first quarter, though currently their purchasing cost of coking coal is much lower. So that positive impact will come in quarter 2. Short point is, Netherlands turns positive in the first quarter itself. The UK EBITDA per ton will be negative in the first half of the year. That's because of the closure costs, also sketchy volumes, but it will turn positive. That will be EBITDA positive in the second half of the year. On the India operations for the first quarter, well, the coking coal consumption cost will be $10 lower. Though currently they are buying coking coal at $30 lower. So that benefit as well will flow through in the next quarter. They also said that the steel prices are up by 300 to around 400 rupees on a quarter-to-quarter basis. So the spreads will improve, but the EBITDA per ton will not improve in the first quarter because they're going to be taking a shutdown, which will impact their volume. So negative operating leverage will play out there. The good news is, though for India operations, the volumes will be higher by around 1.4 million tons in this fiscal. That compares to last fiscal. On the capex front, they have lined up 17,000 crores of capex. 75% of that will be spent in India. But they have said that there's not going to be any big net debt reduction. And that's why their net debt will continue at around 77,000 crores to around 80,000 crores on. On organic versus inorganic growth, they're saying they're going to stick to organic growth, no inorganic growth. They're not interested in Vedanta. They're not interested in NMDC steel assets as well. So those are the big takeaways out there. First look at it, it looked beautiful. But then that fine print told us that there was a one-off in the European operations. So not as good as earlier thought about. Deven, what's your view? Tata Steel, it was appearing to be like a darling at around 175, 180. Everyone thought Europe is turning around. The problem was the street was a buzz in the last 1 month or so. Europe could start moving towards profitability. That happened, but it came with a one-off. What do you do at around 165?
So Nigel, I think don't write off the possibilities that the company has basically made an announcement of. On one side, I think they're talking about by the second half of this financial year, bringing down the loss in the UK business, I think by way of closing down the blast furnace route and subsequently, I think getting into the electric arc furnace. So that is where probably I think the fortunes are being written. At the same time, the brownfield expansion at Kalinagar, I believe that I think is adding the capacity by at least another 25%. And part of it, I think, should get benefited in the course of time in these quarters and subsequently. So from a perspective of looking at the company, also from the point of view of volume-based growth coming in largely from India, and also from the point of view of, I think, saving the cost, definitely, I think, is suggesting that all is not written off as far as I think the business of the company is concerned. On the contrary, I believe that with the steadier prices for steel and at the steadier, I think, the margins by the company, I would like to believe that I think possibility of improvement in the steel prices because of the higher demand and the consumption, particularly from India government. I believe that I think this is going to be probably, I think, one silent factor which will invite the traders back into the stock from the perspective of little long term from now on.
Okay, all right, Deven. So a little bit optimistic actually on the prospects of Tata Steel. Don't throw in the, don't give up so fast. That seems to be the word that's coming from Deven on Tata Steel. Well outlined there, Deven. I wanted to ask you about GMR Airports as well. That's the other play. You have Interglobe Aviation that's doing very, very well. In today's session, in fact, it's holding strong, though the markets are at the low point of the day. And GMR Airports as well, a play on the traffic. The numbers look good actually, but the stock is at the low point of the day. Is it a buying opportunity at around 82 rupees?
So since I don't have the coverage, I will not be able to spell out exactly, I think, the valuations. But as I understand, I think the number of footfalls, the traffic is basically increasing. Passenger traffic is increasing. And that is a good news for even the business of Adani Airport as well as, I think, for GMR. I believe that I think numbers are likely to remain steady and at the same time, I think, going to grow gradually. So from that perspective, I think one should be keeping a positive eye on the stock. But since we don't have the coverage, won't be able to speak anything on the valuation and the price at this point.
The market is, by the way, taken a turn for the worse. So we were down about 180 points when we started at 230. It's lost another nearly 60 points then since that point. And we are now below, actually we can maybe put out an alert. We are under the 20-day moving average or maybe just at the 20-day sort of average. As of yesterday's close, that number was 22,478. So we are at 22,468 right now. So that's the fall that we've seen. Actually, even the Nifty Bank has seen a bit of a drop off from the high was made at about 150 or so. And from 220-ish kind of levels, there has been a drop off there as well. We were trading at about 48,865. And here also, we've come off about 100 points, 120, 130 odd points or so. So that's the overall kind of picture. Just a broad, Deven, thought in terms of sort of approaching trading positions, portfolio positions as we head into the next couple of days. Deven, what's the advice going out from you guys? You've seen many elections, many of these things come and go. Just your thoughts.
Yeah, Prashant, I think well said. I guess I think at this point of time, I think there is no need to keep any super anxiety at this point of time. There are two classes of people, one who believes 300 and below 300 seats and one who believes 350 to 400 seats. Nobody has factored in possibility of, I think, above 400. So should, I think, that number comes up, the market would be definitely positively taking that particular number forward. It is understood. Another good thing which is happening that most of the traders are preferring to stay light at this point of time. And somehow or other, I think everybody is trying to keep the cash in the books ready. So that it is also giving an indication that whatever will be the outcome, ultimately, I think people want to deploy that cash back into the market. So that's a good indication that we are getting. At this point of time, given the kind of event, also at the same time coinciding with your derivative market expiry today, I think all these things put together, I would think that I think stay a little bit muted on the trading position. Maybe I think you get a good chance to get into it. I think if you are holding on cash, maybe a good chance to buy into the market in the given volatility that we may experience here after the next few hours.
Deven, thank you very much for joining in. By the way, one of the big losers today is Titan Industries, and that's down close to about 3.5%. There is an analyst meet scheduled tomorrow. And remember, Titan had disappointed the street in their Q4 numbers, particularly on the margin front. The jewelry margins were under pressure due to competitive intensity. So Titan's analyst meet tomorrow is going to be very crucial. Goldman Sachs has raised some questions. One, they're saying that the jewelry margin, the decline that we've seen, the pressure, is it cyclical or structural? For Tanishq, do they still have substantial store expansion headroom from current levels? Third, is Carrot Lane growth moderating? And four, watches and eyewear are underperforming. Is there a recovery likely? So these are some questions that Goldman Sachs has, in this Titan analyst meet tomorrow. Get into a break. On the other side, we'll invite Ronak Omkar of PPFES Mutual Fund. Stay tuned. Welcome back. Let's get to the other important story. S&P has revised its rating outlook for 6 Indian banks to positive on sovereign action. Abhishek joins in with the details. Abhishek.
Well, as you mentioned, outlook on 6 Indian banks has been revised to positive on sovereign action that S&P has taken with respect to India. So, ICICI Bank, Axis Bank, their, individual rating has also gone up. So, India's economic expansion is having a constructive impact on the sovereign credit metrics is what S&P has written. So, they say that India's banking system continues to ride the good economic momentum, which is well supported by the, recent structural development that is there in this system as well. So Indian financial institution resolution has therefore been built up over the past few years. They expect Indian banks to maintain the strong financial balance sheet over the next 12 to 24 months, that is 1 to 2 years. They have revised
Prashant this side.
Our plan, the other way of deploying.
Actually, it's pretty simple but smart in that sense. But is it also a directional kind? Does it talk?
That's the reason you get into such kind of a trade where you take the upside if it works in your favor and downside is protected to that extent.
Ronak, afternoon. Have you increased your cash holding in your portfolio in the flexi cap?
It has been about 15% for a while now. As per the April fact sheet, it is the same.
Okay. So it's not that you've turned incrementally cautious in the markets. You're just looking to hedge it.
Yeah.
Any changes that you've made in your portfolio in the last 2 months, considering the volatility that we've seen?
Not too many changes, but incrementally we have added to some of the stocks where we found valuations to be attractive, which includes the banks, which includes things like Bajaj Holdings. But again, there are few and far places between now to invest. Valuations have been creeping up for the past couple of years, and we aren't comfortable at deploying a large amount of the cash today as well. Yeah, so we remain cautious, but although we are deployed in companies where we think the valuations are still reasonable.
Interesting new look as well, Ronak. You know, after a while, sporting a new look. Interesting. Pretty much suits you, I think so. But, you know, talking about deploying some money, someone who's ready in case there is volatility post this election verdict is y'all. Y'all are sitting on 15% cash and, you know, y'all are ready to deploy. So that's good news for y'all. But where y'all have deployed money has been Kotak Mahindra Bank. It got a bit of a rap on the knuckles, you know, in the last couple of months or so, 45 days or so, within the last 45 days. And you all have actually bought into that stock. And now I believe banks is closer on 20% of your total mix. So you all are betting on the private sector names, and some of these names that haven't really performed, you expect them to outperform, I'm guessing.
So private sector banks, if you see, say pre-COVID to today, not much has changed in the valuations of these banks. However, these banks have grown. And it's been a long-term trajectory for growth for private sector banks, or well-run banks, that I should say. And they have performed on spot wherever we see that the loan growth is concerned. The only debate is whether how fast they will grow. That's anybody's guess. But I think the valuations where they are, I think any upside in growth that comes in through either loan growth or even the fee income that they earn, I think it's positive for private sector banks.
Interesting, you know, because both these two banks, HDFC Bank and Kotak Mahindra Bank, you'll have both of them in there, and valuations, you know, are the cheapest we've seen in multiple years because the stock prices haven't moved at all. So let's see how that call goes. The other, you know, sector that I'm looking at is some of these stock marketplace, so to call it, Motilal Oswal, UTI AMC. I think you'll have offloaded or you'll have trimmed your stake at least in both these two holdings. Tell us more.
Yeah, we have to be cautious about such capital market exposed businesses because they tend to be very cyclical, and we don't know where the cycle will be. But if the valuations become stretched very fast in a short period of time, we have to be a little cautious. So we have trimmed them at the edges just to prevent a large exposure to these sectors.
Is this on the back of, I mean, some have spoken about potential sort of, you know, regulation which may maybe aimed at generally tempering down all of the activity, especially on the F&O side. Is that something also that you have in mind when you do this?
Not really, but over a period of time, we have seen the market go up such sharply in a short period of time. So I think it's better to be cautious when you're dealing with such cyclicality. If you're looking at a broking business or an AMC business, they actually are cyclical. The yields will be very, very cyclical because the EUMs can shuffle, the market volume can go down if a market falls. So it's better to be cautious at peak market, or if you think that the market has run up very fast. That's the only reason. We still own some of these positions. So it's not like an entire sell-off.
Although, this is, you ask anyone, this is structural bull market, right? Cyclical companies in a structural bull market. The hope is, this is, what we're seeing here perhaps will continue to do very well over a period of time. Anything else that you've added? Anything else that at the margin that you are starting to like? And also, what will you buy with the cash in case there is some volatility, in case opportunity arises? Will you add on to existing positions, or is there something else?
What we will buy actually will be revealed in the fact sheet when it comes out. See, in the last bull markets, if you've seen, when we were sitting on cash, it really helped us to double down when the markets corrected. The recent example is the COVID crash. Before that, if you go back even till December 2017, Jan 2018, we were sitting on 30% cash because that time the market was at such a peak valuation. And that time we were fully deployed in our global portfolio as well, up to 30%. So yeah, these things are, because the valuations dictate, we have to make sure that we guard ourselves by not chasing these high valuations. So cash will be deployed. So a couple of good ideas we come across, the cash will suddenly go down and you will see that 2 new names are added, or existing names have gotten additional allocation because the valuations were very attractive. So yeah, it depends on what is really attractive at that point in time. Can't really commit in advance as to where we will invest.
But Ronak, the inference from this is today you have a 15% cash holding, but at times you've even had a 30% holding in a cash position when you anticipate a bigger crash. So it doesn't mean that, so the takeaway could be that you don't see a big correction in the market, which is why you've got a average level of cash holding?
We are not anticipating any crash, to be very fair. If you look at the portfolio, these are reasonably priced companies. The whole point is to not chase very, very steep valuations. The company's earnings may not grow. Like Prashant said, it's very easy to forget a cycle, right? We might think everything is a structural story, the long-term growth, but there are these in-between cycles to achieve that growth. Sometimes we'll have to face a down cycle and sometimes it will be an up cycle. So because keeping the cyclicality in mind, you have to be very cautious as to how much you pay for the same opportunity of growth. So we are not denying that the market will not grow, the companies will not grow, earnings will not grow, but we are just being cautious because we are not very comfortable with the valuations we have to pay. And that is the way the market is. It's not going to be always in your favor. You always will have market areas which are very expensive and some areas will be reasonably priced or very, very cheap. So we will stay where the cheapness is and we will sell where the expensive valuations are.
And I think you're still bullish on one of those stocks that has done pretty okay, Power Grid. I think that's the second largest holding that you'll have, right? So you'll continue to build onto that position.
So power sector theme, if you have seen over the past couple of years, has been going up like crazy. If you see capital expenditure, little businesses also doing very well because on the back of large order books. But Power Grid is a different business. It essentially gets its cash flows from consistently keeping the grid on and expanding the grid over a period of time. So it's more of a disciplined growing player. It has had a good history and track record of execution. They have good cash flows. They pay out good dividends. As long as you're not overpaying for the opportunity, I think a company, a utility like Power Grid is a very decent business to own.
Okay, all right. Ronak, thanks a lot for joining in. So key takeaways, then you're sitting on some cash of around 15% odd. In case opportunity provides itself, you'll look to get in. Private sector banks is something that you like. Power Grid is one of the top positions over there as well. And you've taken some money off the table on Motilal Oswal and UTI AMC. Thanks a lot for joining in, Ronak. Prashant.
No, I mean, actually, on the power thing, Najal, that you're talking about, we're going to talk about power. And power demand is hit a new all-time high, right? I mean, this is the daily peak power demand that we're talking about. And ties in, of course, nicely with what Ronak was talking about. And, of course, the overall expectation that this is a sector which needs more investment, both on the thermal side and, of course, renewables as well. But the data first. Rachna is standing by with just that. Rachna, over to you.
India's peak power demand hit a record high of 246 gigawatts on Wednesday. This comes at a time when the entire country is going through a heat wave. However, it's the northwest and central parts of the country that are most affected. But overall, including power shortage, peak power demand stood at a record high level of 246 gigawatts, up from last year's 242, which we witnessed in September. This year's initial expectation of peak power demand was around 236 gigawatts, but was later revised to 260 by the Power Ministry. The record high in peak power demand was recorded for many states as well, like Uttar Pradesh, that hit a peak power demand of 28 gigawatts, along with Maharashtra and Gujarat at 27. Delhi, that also recorded highest temperature ever yesterday, saw a peak power demand of over 8,000 megawatts, surpassing its expected limit of 7,000. It is also the first time ever that peak power demand has surpassed 7,000 megawatts for 12 days in a row this month in Delhi. Rising power demand has also had an effect on coal stocks as well. As many as 184 thermal power plants with a total power generating capacity of 211 gigawatts have about 68% of normative stock value, as demand for electricity is also on the rise. And that's not been the case since just yesterday, but since the start of this month of May. And this is likely to be the case till the onset of monsoon, which is expected in about 2 weeks.
Okay, and we're watching the onset closely. Rachna, thanks very much for that. This is veteran investor Mark Mobius, who's actually talking about the power theme in India and how he believes this will be a big one. I mean, for investors to be able to make money as well. Listen in.
I like the power sector to begin with. You know, one of the things that people don't really realize is the incredible demand for power, not only in India, but globally, which is why I mentioned many of these Indian companies are global in the sense of starting power plants in different parts of the world. But India needs more power. And of course, that is not only coal-fired, but sun-fired, wind-fired. In any way you can get more power, it's going to be necessary. So you need to have probably a doubling of power capacity in India going forward. Consumers all have cell phones. They have to power up these cell phones. All the chips, high-powered chips, need more power. And of course, consumers are consuming more, and that means more and more power. So this is going to be a big, big growth area in my view.
All right, on that note, we'll slip into a very short break. As always, on the other side, we get you a few BTST calls from our technical experts.
Welcome back. The expiry-related phenomena is playing out. Just pull up the intraday chart of the Nifty. There's a big recovery from the low point of the day. A few of those stocks, well, they are bouncing back. HUL, just pull up HUL. You know, in the last few minutes, you've seen a bit of a recovery on HUL. So that stock has cut its losses a little bit. Just take a look at that. Some of these larger, heavier stocks as well would be seeing a bit of a recovery. Sun Pharma, let's see that. That was down close to 2%. I think it's down only around 2% right now. So a bit of a uptick is what we're seeing on that stock. Dr. Reddy's as well. I think the pharma index itself has cut its losses a little bit. The index was down close to 2.5%, I think. So that one, in fact, has cut its losses. Keep an eye out on a couple of these names. Now we've seen a bit of a recovery, which as we speak is getting sold into. Rajesh Bhosle is back with us. Rajesh, what are the BTST calls you have for us?
Yeah, so if we see TVS Motor, this stock hasn't moved downwards, even though market has corrected significantly. This stock is already in a inverse head and shoulder breakout, and we expect that from tomorrow onwards, we can expect the positive traction to continue. So one can buy TVS Motors. It is trading around somewhere around 2230 odd levels. One can buy with a stop loss of 2190 and can expect 2320 in a very near term.
Okay, Rajesh, I mean, just a quick word on the Nifty as well. We are sort of around the 20-day right now. What's your sense? I mean, do you think this holds? Is there more downside? Just very near term, what are your views?
So this 22,400 to 450 is a very key level because, as you highlighted, we have a 20-day moving average. Also, if we see, it is last week's low. So if we have to neglect the bearish engulfing on the weekly chart, market has to sustain around these levels. And if we see Bank Nifty is supporting markets. So yes, if we sustain here, we can expect a bounce back in tomorrow's session.
Thank you very much for that. Let's move on. MSCI had announced a list of additions, deletions as a part of the May index review. The adjustments come into effect tomorrow. Vivek is here to give us a recap of all the changes announced in the MSCI Global Standard Index and the MSCI India Small Cap Index. Vivek.
Well, you know, that's right. So at least for a day tomorrow, you might feel a selling pressure actually abate, given the fact that India's weightage as far as the MSCI Emerging Market Index will now rise to a historically high level of 18.8%. Tomorrow, expect to see inflows of over $2 billion just in the last hour of trade, on the back of these MSCI ETF flows. Now, we've already highlighted this list of stocks, earlier in terms of which are the ones that are entering. But since tomorrow is the day when the actual adjustments will take into place, highlighting them once again for the benefit. Now, talking about the list of stocks, 13 additions and 3 deletions from the MSCI Global Standard Index. So Bosch, Canara Bank, Industar, all of these stocks also come in. Jindal Stainless, JSW Energy, Mankind Pharma, NHPC, PB Fintech, flows of almost $232 million in PB Fintech. Phoenix Mills, Solar Industries, Sundaram Finance, Thermax and Torrent Power. All of these stocks enter in, the highest flows coming in as far as PB Fintech is concerned. On the other hand, 3 stocks will be deleted. So Berger Paints, Indraprastha Gas, as well as 197, that is Paytm, come out. All of them will see outflows in the range of $50 to $100 million. Apart from that, in the MSCI India Small Cap Index, there are almost 28 additions and 14 deletions. So those stocks too will be in focus. There will also be some rebalancing in terms of weightages. So on account of all of that, total net inflows that India could see tomorrow in the last hour would be a little over $2 billion in the session.
So this is all as of close yesterday, right? As tomorrow.
As of close tomorrow,
Vivek, right?
That's right. Last hour.
And in terms of stocks that you mentioned, have usually there is pre-positioning and stocks run up and they correct. I mean, all of that has happened here, or is it anything you would like to highlight in terms of a name or two?
Let's just look at the process, that actually is undertaken. Now, this particular review, happens every quarter. So a little over 2 months before this particular event takes place, quant analysts already start making their analysis and they start pitching it to their clients. So a certain amount of pre-positioning already happens. After that, there is an MSCI cutoff date, which will be at least a week or so before the actual date in which MSCI announces the review. After that, there is depending on the stock price, the list is further pruned, and post that, MSCI announces this also well in advance to the actual date of adjustment. So in most cases, it's very safe to assume that the pre-positioning is already done, and tomorrow will be the day in which the actual ETF flows comes in, but the active funds, that play for this particular event would probably be already out of this particular trade by then.
Well explained. Thank you, Vivek, for that. Let's move on and talk about Cummins. That's one of the big drags today, despite posting a strong set of earnings. Vamakshi joins in with the details on this. Vamakshi.
Well, absolutely. There's no doubt that the company has posted a very strong set of numbers this time around. Revenue has come in nearly 6% higher than our estimates, while EBITDA and net profit has come in 41% and 58% higher, respectively, as compared to what we were expecting. The surprise this time around was on the margins front as well, but it is more important to focus on the commentary that came through from the management. The management said that they are expecting double-digit growth in FY25 as well. They posted double-digit growth in FY24. So that is expected to continue. And as far as the transition to CPCB4 norms is concerned, they have highlighted that nearly 1/3 of the sales have come through from this, from products that adhere to this new emission norms, and they're seeing very good traction here. They do not see an impact of pre-buying for the earlier norm products, that is CBCP, to play out anymore, and there will be some turbulence as the new norms now come into place, but they do not expect a significant impact. But on margins, they said that they did have a one-time advantage of 60 crores this time around. Profitability was better in this quarter, mainly on account of a better mix as well as cost efficiencies. They also highlighted that the gross margins may hold at the levels that were seen in FY24, but maintaining these gross margins is a challenge given the higher metal prices. They aspire to improve margin with the new products coming in, but they will have to wait and watch as to how the competition plans out. Apart from that, demand remains quite robust. They have highlighted that data centers, infra-related growth as well as investments in power gen are expected to continue, and therefore they expect to see broad-based demand across all segments. They have also highlighted that data center contribution to the top line for power gen revenue could exceed 10%. And as far as exports is concerned, they're a bit cautious out here because they're highlighting that Europe is at an all-time low. Africa is struggling mainly on account of the currency issues out there. The demand, therefore, could be weak for another quarter. They are expecting, however, after some recovery to kick in after there is a correction in the exports. The percentage of exports contribution is expected to remain stable in FY25 and is expected to revert back to the levels of 30 to 35% beyond FY25. So overall, a good set coming in from Cummins, but the commentary on exports as well as gross margins putting the stock under pressure today.
Okay, all right. Thanks a lot for that, Vamakshi. That makes two of those stocks, right? Cummins as well had a couple of one-offs in there, and the commentary wasn't very encouraging. So explains why that stock has sold off. And pre-positioning, the street was bracing for a good set of numbers. And Tata Steel as well, they as well had a bit of a one-off in the European business. So both those two actually are down under pressure. Well, let's get to Nimesh. He's joining us to tell us what he's picking up in terms of dealing room action. Nimesh, we're at the low point of the day. It's expiry day, so part of it could be attributed to that. But how are the flows looking?
Absolutely, Nigel. Because of the expiry as well, we are seeing this kind of pressure in the market. But again, there are some technical factors as well. I understand a lot of clients have not been allowed to roll over their positions, or for that matter, even the cash market. They've been asked to square off. So maybe that also explains that the broader markets are also under pressure today. I guess all eyes will be on the election outcome. That's going to be a big trigger for the markets to watch out early next week. So that's something to track. But I guess two things to watch out for. One, after today's fall, the PCR has technically fallen to 0.6 to 0.63, technically around 0.6. Market tends to bounce back. So watch out for that particular thing. And also tomorrow, because of the MSCI rebalancing, there's going to be an inflow of close to $2.5 billion. So both things to monitor as to what happens, starting tomorrow in the fresh series. So that is something to track. In terms of today's numbers, the institutional data again will look a bit skewed because of the three large block deals worth 3,700 crores. Remember, the same thing happened yesterday as well. So for the last couple of days, nearly $1 billion is what a lot of PEs and promoters have sold in the open markets. Even that's sucking to a bit of liquidity in the market as well. I guess from a sector point of view, the big sector outperformance has come in the banks names today, largely on back of that S&P upgrade on few select names. But broadly, don't account for too much into today's FIDI data because of the MSCI rebalancing, because of the expiry as well as the blocks. But PCR at 0.62 is an important trigger to watch out for.
All right, Nimesh, thanks for that feedback. In terms of specific stocks, what's on your list?
Well, the first stock is IRB Infra, a big cut in that stock, down 10%. It was part of my chart list a few days back that expect a large block deal. Got executed today. Promoters sold close to 4.5% stake. But interestingly, I understand one of the domestic mutual fund was an anchor investor in today's block. The stock is under pressure because I understand there is a bit of slippage element as well. But in terms of buyers, almost 60 to 70% of the book was from long only. That's the overall feedback. The second name is Cipla. Been under pressure today, but largely I understand a leading long only fund has become active buyer and has been accumulating as well at these levels. Pharma in general has seen some bit of buying interest back, but particularly to Cipla, a very long only fund is an active buyer there. The third name is Tech Mahindra. The entire IT is under pressure today, but Tech Mahindra stands out purely on back of self-flow. So some bit of profit booking or whatever, but there is selling pressure. So expect high delivery volumes in Tech Mahindra today. And the last one is ZF Commercial Vehicle. Again, very thin stock. Promoter, the parent owns 75%. Domestic mutual funds close to 10-12%. So not much of a float, but the indication is there could be a large block in ZF Commercial very soon. Again, there has been a trend of parents selling stake in India for buybacks in the global market. So maybe on similar lines, you could expect a large block in ZF Commercial very soon.
Okay, thank you very much for that. Let's also invite Ambrish Baliga on the show now. Ambrish, the correction over the last 2-3 days is a good time to go shopping. So any stocks which have entered into attractive levels appears to be promising to buy at current levels?
See, there's one stock which I would recommend buying at these levels because it has anyway corrected decently well. That's Easy Trip Planners. It's the second largest online travel platform with more than about 2 crore customers. Fastest growing and most profitable online travel platform in India. Gross booking revenues have been growing at a CAGR of about 38% in the last 5 years, and EBITDA margins is about 38%. They have about, both online as well as offline model with about 61,000 agents. And recently, they've started the international expansion with operations in the UAE, UK, and Thailand. Recently started, offline franchisee stores in India. And currently, they have about 12 stores in the last few months. Q4 to the earning momentum continued with a 24% growth at the PBT level. But there was an exceptional write-off because of the go-ahead dues, and that resulted in a loss. But I'm looking at a revenue CAGR of about 30% and EBITDA CAGR of 24% over the next 3 years, and expecting an EPS of about 1.75 for FY26. And my target for the stock is 62.
Okay. Okay. All right. That's ease my trip with, that is the pick from Ambrish right now. Now, there is an insurance story as well, right? I mean, we all thought that this entire surrender value business was settled. Now, surrender value is nothing but what you as a policyholder gets, has to be paid by the insurer if you surrender before the end of the the term of the policy. So, if it's a 10-year policy, you surrender within 2 years. How much you as a policyholder needs to be paid by the insurer. The rules were first proposed by the IRDAI, the insurance regulator, back in December. That was harsh to insurance companies. There was another set which made it so that it perhaps is almost unchanged. And now there is another proposal which has gone to insurers, which is almost as tough as what was proposed in December. Stocks were down yesterday. They're down today as well. Yash is here with details on what this means. Yash, over to you.
Well, Prashant, it was only in the last meeting which happened between the insurance regulator chairman and the insurance CEOs, where the chairman did mention the fact that the special surrender value paid to the policyholders by insurance companies need to be increased. Since then, over the last 20-25 days, multiple discussions between the industry and the regulator on this particular topic. And it was just day before yesterday when the regulator sent a particular draft proposal to all life insurance companies, essentially telling them how the regulator thinks the special surrender value element should be increased in the future. As far as the wordings of that draft sent by IRDAI to insurance companies is concerned, I will just read out 2 lines and then I'll explain what that exactly means with numbers. The draft says insurers to ensure that special surrender value is at least equal to the expected present value of paid up sum assured and paid up future benefits. The second point that it says is that the rate of interest to be calculated, for present value of paid up sum assured shall not be less than the 10-year GSEC yield. Now I'll tell you with an example exactly what this means with numbers. Take an example of an insurance policy where the period of the policy is about 10 years. The sum assured is 1 lakh rupees. There's a bonus element of about 50,000. And when the policy, reaches its maturity, the policy holder gets about 1.5 lakh rupees. Take GSEC yield as about 7%. Now, assuming that the policy is surrendered after the first year itself, which means after paying an annual premium, which would be about 10,000 rupees. First, one needs to calculate, this is as per the formula suggested by the regulator, one needs to calculate the paid up sum assured value. Now, the formula, if the numbers are, inserted in that formula, will give you a paid up sum assured value of about 15,000 rupees. Once this value is arrived, then one needs to get the future benefits, paid up future benefits of this particular policy. Once these numbers are put in that formula, then you'll get the special surrender value, which in this particular example comes to about 8,159 rupees. Now imagine, a policyholder has paid about 10,000 rupees, policy is surrendered after that, and he gets 8,159 rupees as surrender value. Compare this to the last two drafts which the regulator had put out. The one that you spoke about in December, that suggested 83% of the premium paid has to be returned at surrender value. Of course, there was a lot of resistance. The regulator mellowed it down, bringing it to 30%. Now this new draft again takes it to about 82%, again bringing uncertainty on that entire topic of surrender value.
All right. Well, the regulator is not surrendering yet on surrender value. Yes, thanks very much for that. Very keen, pushing hard to so that the policyholder gets a higher surrender value. But I'm sure insurers have till tomorrow to provide feedback, and they'll push back as well. Amrish, we'll come to you for a quick comment on this one, but we have to take a quick break, so we'll do that and see you on the other side.
Welcome back. Well, struggling to find any winners, but the Nifty, at least on the low point of the day, it's cut some of its losses. Hero MotoCorp has seen a bit of a fight back. ICICI Bank as well and Tata Consumer, they have pulled back. Amrish, I just wanted to ask you one question before we let you go. Page Industries, any view out there? That's one of the few winners actually in the last 30 minutes or so. Page Industries or Sun TV, either of them?
Nigel, in fact, both these stocks I don't track very closely. But coming back to the life insurance, thing which you're discussing, I think the problem out there lies with the sort of expenses which are incurred in onboarding of the new policy. Because in the first year, quite a few of them pay 35%, even LIC pays 27%. So I think going ahead, in case this goes through, the commissions and the onboarding expenses will have to come down very sharply. Otherwise, most of them would make losses in, any of these policies being returned.
Okay.
Right. We've got, 3 minutes to go for the market closing. And we have the indices absolutely, actually there's a bit of a recovery which is coming through, right? 177 points is what we are down by, 22,530 or so at this stage. Let's, Amrish, just a quick word, if you will, on these, some of these other companies which have been selling off. Metals, for example, names like Vedanta, etc., which have corrected, which were going one way, have come off sharply now at about 443 or so. Would you look at it positively? Right. There is a tailwind of uptrend in underlying commodity prices, although there also we saw a bit of a break. Your thoughts, Amrish?
No, because I don't think these are very sector-specific sell-offs. Since we are getting so close to the election result date, I think people are just looking to book out to a certain extent and stay on cash. So wherever the stocks have done extremely well or the sector has done extremely well, we are seeing some sort of a profit booking happening there. So I wouldn't take it as negative for a stock like Vedanta. In case it comes down, I think it's a buying opportunity, because I've recommended this in the past and I continue to be bullish on the stock.
Okay, all right. We'll just sort of wrap up things here, Amrish. Thank you very much for joining us, but we'll sort of continue our chat a little later post-close. We've got, 22,547 as far as the Nifty is concerned, so about 160 odd points lower. And the Sensex is down 450 odd points, 74,060 coming through right now. So just a sort of quick run-through of what's happening. 1,900 stocks are lower today. Advanced decline actually almost, not almost, 3:1, more than 3:1. So many more names lower as compared to stocks which were higher. Banks, of course, the only sort of, in a way, bright spot, 0.7%. So Nifty Bank also sold off very sharply at one point in the last hour, but then there was a very sharp recovery as well, which means it's a very respectable close, 0.75% on the Nifty Bank. So it's the 5 large banks on the Nifty which I think have saved the day. Otherwise, even the Nifty would have been down